Jamie, you were in New York this morning giving great earnings reports, actually. And now you're here. It's the life of the CEO to be on the road. We appreciate your time with us. I just wanted to open with an economic snapshot from your vantage point. What's happening in the economy? What's happening in the global economy? What are the main signals you're looking at?
So first of all, welcome everybody. Thrilled to be here. I have a little laryngitis. I apologize for that. Look, the global economy is like inscrutable. So I'm going to tell you, but I want to point out whenever you talk about it, we always say we're worried about this or uncertain about that. You can open the newspaper of any month, of any year, of anything. It's always that way. Always. What you have to do is compare it to an average, and I do think an average is more complicated. It's more complicated because of trade and tariffs. It's more complicated for huge global deficits. The inflation is not going away. The geopolitical situation, the remilitarization of the world. These are fairly serious things. Interest rates, and I think the chance of surprise are pretty high. Underneath that, if you look at America, the consumer's doing fine. Unemployment's good. Wages not going up so much. Labor's gotten a little bit weaker. Wholesale credit's been good, but I suspect it's, we borrowed and spent $10 trillion over the last 6 years. Of course, that's going to drive corporate profits and corporate credit, so that may weaken. The whole world is a deficit issue. And so I'm kind of in the cautious category, and also made cautious by the fact that asset prices are high, in some form of bubble territory, but that doesn't mean they can't go up 20% more. Credit spreads are historical lows. So it looks like the world is pricing in, I'm going to call it a continued soft landing. And, if you looked at next year, and I hate forecasting, what's the odds of a recession? Well, in any 1 year, it's 20 or 30%. So, I think the market's pricing in 10. I'd say 20 or 30% is probably more accurate. The chance of not being surprised by something next year. And then you look at factors like tariffs. I look at, it's just a straw on the camel's back. It's not the one thing that's going to break the camel's back. It's always a confluence of factors that do that, and it's very hard. Maybe AI will one day figure it out, but it's very hard for human beings, to consistently forecast real inflection points in the economy.
What are some of the longer-term cycles that you're keeping an eye on that may not be reflected as much in the numbers today, but you're a little bit worried about?
That's a very important point. I always do future back. People look at, the data today, unemployment today. Well, unemployment was good. Markets were good in 71, and then they crashed. That was true in 80, and then they crashed. That was true in 87, and there was a crash. That was true in 1990, and it got down. So you can't look at current data. You've got to anticipate data. So here's some anticipatory data. Deficits are not going away, and that will bite one day. I don't know when. Inflation, what I see is healthcare prices going up 10%, food prices are not going down, immigration policies are inflationary, the remilitarization of the world is inflationary, the restructuring of trade is inflationary, the capital needs from AI and infrastructure is large, growing, and probably inflationary in the short run. So that's why I look at the risk is that rates go up, inflation goes up, and the Fed cuts rates anymore, maybe has to reverse course. And when I look at risk, I just put that on the table among all the possibilities of outcomes, and we are prepared for that more than most. In fact, if you look at all things being equal, make more money if interest rates go up. On the other hand, if interest rates go up because of inflation and there's stagflation, we will do much worse on credit, volumes, and a whole bunch of stuff I can't predict.
Can I play a game with you?
What?
Can I play a game?
Sure.
Can we play overvalued, undervalued?
Yeah, you could try.
Okay. Gold.
I always tell the press, you can ask whatever you want, and I say whatever I want.
We're going to play a game. It's time to play a game. So, gold, overvalued or undervalued?
I don't know. I mean, I'm not a gold buyer. It costs 4% to own it. It could easily go to 5,000 or 10,000 in environments like this. This is one of the few times in my life I say it's semi-rational to have some in your portfolio. But asset prices are kind of high, so I'm not. Yeah, in the back of my mind, that cuts across almost everything at this point.
Bitcoin.
My blockchain is real. Stable coins may have a real use. We have the JP Morgan coin. Tokens will be real. Programmable money, all that'll be real. I'm not going to say about Bitcoin because then that's all I'm going to read about in the headlines for the next, and then I get, death threats and shit like that. So, that stuff like.
So it's not a pit rock, but maybe a pit rock, TBD. But the underlying technology, you think?
Yeah, but I've always said that. Blockchain is a technology that we've all been yapping about for 12 years, and it's not fully deployed. because it's hard to deploy blockchain that we all agree on permissions and rules. And I do, we do use it. We use it intraday repo. I think it's going to replace certain systems we all use that are clunky or late or not 24/7. Those are all legitimate complaints. And blockchain may be one of the things that fixes that. Other technologies can fix it too, by the way. It's not the only thing that can fix it. And sometimes it's a solution looking for a problem. We already move money real-time payments. Most of it moves digitally in effect. It runs through AML, KYC, risk systems when it happens. You can't just replace all that with a blockchain and think you're doing what regulators and governments want you to do. So it's a little more complicated than just it's going to replace everything.
Next, NVIDIA.
I can't comment on them, but there's some of these names that I just don't want to give specific stuff. Unbelievable company. AI itself is real. I know we're going to talk about AI a little bit later, so I'll reserve that for that.
Okay, so then what about OpenAI? That's the last one.
Well, again, are we going to talk about AI in general, or you want to do it now?
That's next.
The way first of all, I think you should all use it. To stop debating open, closed, little models, big. It's going to be all that. It's going to be faster. It's going to get cheaper. You have specialized models. We have 2,000 people doing it. We've been doing it since 2012. We have hundreds of use cases. We can identify benefits of like $2 billion, maybe 2.5. I was told today. Either cost saves or revenue enhancements. And it's just part of how we run the business today. Just like big math was that before, and is making huge improvements in certain things. Other things are hard to measure, like Gen AI. We have almost 150,000 people using it a week on internal documents for report writing, for reviewing hundreds of, thousands of legal documents, for summarizing things. It's just hard to tell the productivity. I do think it's real. I think in total, AI is real. Just like if you go back to 1996, in total, the internet was real. There were a lot of people in there. You could look at the whole thing like it was a bubble. Remember, it crashed at one point, but out of that came Google, YouTube, Meta. So I think in total, it'll pay off. It's hard to know exactly which ones will, and they won't be the ones you necessarily predict today. There may be some attributes where winner takes all. That may not be true. I mean, we'll see over time how that works.
Yeah, I mean, I think that's completely true. The hype is a real tech that is extremely transformative.
Extremely good, yeah.
And you will get the next
power. It's high capital usage, unlike the internet. So it's got different dynamics. The power may not be there in some cases. Bad guys are going to use it, but bad guys use the internet on social media. They use airplanes for bad things. And so I do think there should be proper, thoughtful regulations and guardrails to protect the public. It will eliminate jobs. I think people should stop sticking their head in the sand. So did tractors, and so did cars, and now if it happens too fast, we, society, government, and businesses should figure out how we can save jobs, save people, retrain, income assist, early retirement or something. So you can't just take all these people and throw them on the street where the next job is, making $30,000 a year when they're making $150,000. That you'll have a revolution. So we should be thoughtful about that. But in the meantime, you should get good at using it and deploy it, and we'll figure it out.
So there's so much in there that I could dig into each of it, and so I'm going to try and tack a little bit at a time. One is your investment in AI as a company. There's been this well-cited MIT study that so many of these early corporate pilot programs of AI have just been giant money pits, and they haven't been that effective in generating real returns for companies. I know you just came out with a report that said you guys have invested about $2 billion in. You're getting about $2 billion back. It sounds like break-even point finally.
Yeah, and I was wrong about the $2 billion cost. It's considerably less than that. I think MIT.
You have spent less.
I think MIT was talking about generative AI, not about AI. So most of the things that when we apply AI to AML, KYC, or risk or fraud, very specific things, or errors or customer service, it works. Reconciliations, you apply it. And then sometimes, but it's just improving your procedures. It's not even really AI. It's just part of the process improvement. You go in, and all of a sudden, your head count's down 40%, and your time to get something done is not 12 days. It's 12 hours or 12 minutes. So it absolutely works. You can overcount, the cost saves or the revenues. It works for fraud. We know our fraud costs are coming down. Most people's are going up. It works we spend $10 billion a year in marketing, and we know it's going to work on marketing. I mean, marketing by its nature is very inefficient. Put the stuff on the wall and see what happens. And they'll be able to measure multiple different things. So, and it can measure productivity. It reduces coding times for those who use it by 30%. That's all real. Generative AI is the other category where that's where you're really using generative AI to read documents. So you might have used it to figure out some of these questions here. It's hard to tell. Like,
Never.
what do you say? What?
Never.
Yeah, what are you gonna say? Well, it saved me
A
2
little.
hours. What's that worth? Or did you just spend 2 hours doing something else? Or so we don't really know. And I think it's a mistake to try to calculate everything positive. We spend a lot of money getting data into the proper format so it can be used by AI. We're just doing it. We're not measuring how much it costs. We're just going to get it in proper database, et cetera. So, but it is completely real. And again, I think MIT is either wrong or it's just generative AI. And I think it was just generative AI.
Interesting. So did you have any big corporate failures, though, as you were figuring out how to make more efficiencies with AI? Any learnings along the way?
No, we did something different where we it's not in tech, even though them and tech are like deep partners in everything they do. And tech does a lot of the heavy lifting, but the AI experts, think of the data CEOs and the data people are in this area. So, and then we have a mirror inside every company, credit card, consumer, trading. And I think it really works